Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. In this video, we are going to be looking at two essential chart patterns for any Forex trader. And specifically, we are going to be focusing on the ascending triangle pattern and the rising wedge pattern. Okay? The ascending triangle pattern and the rising wedge pattern. Now, these patterns are key when it comes to predicting potential market moves, but they have very different implications, right? So if you've ever wondered when a bullish breakout might happen or when a trend could be on the edge of reversing, stick around because we are going to cover all of that and more. And before we jump in, don't forget to hit that like button and subscribe for more trading insights. All right, let's start with a quick overview of these two patterns, okay? Now, the ascending triangle and the rising wedge are both classic chart patterns that traders rely on, especially when analyzing price action and market sentiment. Even though they can look similar at first glance, the signals they give are quite different. All right? Now, the ascending triangle typically suggests a bullish outlook. Let us see if we can find an ascending triangle pattern real quick. Okay? Let's see if we can find an ascending triangle pattern. Okay. All right, so can we see an ascending triangle is marked by a level of horizontal resistance and higher lows. All right, can we see this? Can we see this? Let me insert a triangle. Can we see that we had horizontal resistance around here, right? We had horizontal resistance around here. So this is a level of resistance and we can see the price making higher lows. So that's why we call it ascending triangle, because the higher lows are ascending, whereas the horizontal resistance remains stable. Okay, so this is an example of an ascending triangle pattern. Okay, so it represents, it typically, suggests a bullish outlook, signaling that buyers are gaining strength. On the other hand, the rising wedge is often considered a bearish pattern, warning traders of a potential reversal. And let us see if we can find a rising wedge pattern. A rising wedge is a pattern in which we have higher highs and higher lows, but the higher highs and higher lows are not on the same angle, right? They are rising in such a way that if they continue to rise at that pace, they are going to converge at a point sometime in the future. So let us see if we can find an example of a rising wedge. Okay, I think we have somewhere of a rising wedge around here, because we can see somewhere around here we have higher highs being formed, and we also have higher lows, right? We also have higher lows being formed. But can you see that this is different from a triangle, because the triangle has a horizontal resistance, whereas the rising wedge is having higher highs and higher lows. But we can see that the lows, the slope of the higher lows is quite steep compared to the slope of the higher highs, right? So if this continues this way, at some point they will converge sometime in the future, right? But most of the times, before the trend lines converge, we might have a breakout. Okay, most times we eventually have a breakout even before the lines converge, and it seems as if we had somewhat of another rising wedge around here. Can you see? This was one rising wedge, and then we had a little bit of a break in structure, and then the rising wedge continued in another form, and then we suddenly had a bearish breakout. So can you see? So this is what we call a rising wedge. Okay, now for the ascending triangle, picture it like this. You have a flat horizontal resistance. You remember, in this video, we are trying to compare and contrast these two patterns, right? We are comparing both of them. We're finding, the differences and any possible similarities between both of them, right? So for the ascending triangle, you remember that you have a flat horizontal resistance line at the top, right? And an upward sloping support, okay, at the bottom. Now, each time the price hits that resistance line at the top and an upward sloping support, each time the price hits the resistance line, it can't break through right away, okay? The resistance is quite strong, all right? But each bounce of support, it makes a higher low, showing that buyers are stepping in with more strength every time. So you see the point now, right? Now, the big takeaway here is that the ascending triangle often leads to a bullish breakout. Now, it's not always a bullish breakout, right? For example, we can see here, there was a bearish breakout, but it's possible that it was an economic event that affected this. I don't really know, but it's possible because shortly after the breakout, we can see the price just jumping back into the channel. Right, it's possible that it was an economic event, or it could be just pure price action. Maybe there was a bearish breakout as a result of significant supply, and then we had the price retracing back into the channel just almost immediately, right? So we had another breakout here. You can see it was a bearish breakout, right? Before eventually we had price rallying up. But most of the times, right, the ascending triangle pattern shows that there is increasing buying interest. That is the reason why the chances of a bullish breakout are usually, quite high. But it doesn't mean that there's always going to be a bullish breakout. Okay? All right. Now, if you are finding this information useful, please give this video a thumbs up and don't forget to subscribe. We dive into chart patterns, technical analysis, and trading strategies all the time, so don't miss out. Okay? Now, let us look at the rising wedge pattern. All right? Now, this one is different, and it tends to signal a possible bearish reversal. Now, a rising wedge forms when you have a narrowing price range, as we can see in both instances, right? With both the support and resistance lines sloping upward. Essentially, the price keeps climbing, but it's doing so with a lot less strength. The pattern starts wide at the base, right? And narrows over time as the price moves higher. The rising wedge often appears at the end of an uptrend, okay? And it can be a warning that the bullish momentum is losing steam. All right? It can be a warning that the bullish momentum is losing steam. Now, what traders look for here is a break below the support line, right? As we had here. Okay? When this happens, it's a signal that the buyers are losing control and the price could start to decline. Now, volume also plays a role in this. All right? When the break occurs with high volume, that's a stronger confirmation of the bearish trend reversal. Okay, so let's summarize and compare these two patterns. Now, the ascending triangle usually forms during an uptrend, okay, and is considered a continuation pattern. Meanwhile, it also signals that the upward trend might continue after the breakout. Okay, it's often seen as a bullish sign when the breakout occurs above the resistance, especially with strong volume backing it up. On the other hand, the rising wedge is more common at the end of an uptrend and can act as a reversal pattern. When price breaks down below the support line, like what happened here, especially with high volume, is generally a bearish sign, suggesting that the price could begin to fall. Now, this distinction is critical. While both patterns might look similar at first, their implications are actually very different. Okay? Being able to recognize and understand these signals will make you better prepared to make informed decisions. All right, now that we've covered what each pattern looks like and what it signals, here are some quick tips to keep in mind when using them. First, always confirm with volume. All right, you can add on the volume indicator, okay, when you want to make your confirmations, right? Patterns like these are much more reliable when there is a strong volume backing the breakout or breakdown. Second, be patient and wait for confirmation. Okay, it's tempting to jump in early, but waiting for that breakout above resistance in an ascending triangle or breakdown below support in a rising wedge can make a difference. Okay, also keep in mind that while these patterns are powerful tools, they are not foolproof. It's always a good idea to combine them with other technical indicators to help confirm the signal. For instance, using RSI or MACD alongside these patterns can add another layer of confidence to your trade decisions. Okay, so that is it for this video. I hope this breakdown of the ascending triangle and rising wedge patterns gives you a clearer understanding of how they work and what to look out for. With these insights, you'll be better equipped to recognize potential breakouts and reversals on your chart. If you found this video helpful, please hit the like button and subscribe to the channel. We've got a lot more content lined up on trading patterns, strategies, and technical analysis tips, so don't miss out. Thanks for watching and happy trading.